Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And with that, today we're taking a look at SoFi Technologies, ticker symbol SOFI. This is one of the more popular stocks to trade in various online forums. Now, people have all kinds of reasons for looking at SoFi. The thing that attracted me to SoFi today in particular is that last week it had a significant drawdown. And I think that could present a particularly good buying opportunity. And here we have SoFi's annual chart, and you'll see that the share price has dropped pretty significantly, almost 20% from the high just a few days ago, and is now right in the middle of the moving averages. Seems to be leveling out just above $8 a share, but it was over 10 last week. And we have the RSI falling below 40, and looks like it's continuing to fall. Both stochastics are falling and are apparently continuing to fall as well. And the volume is a slight rise in buying or selling pressure, I should say, but that doesn't seem too exceptional. And the MACD is well below zero and appears to still be falling. Now, one thing you may be aware of with SoFi is that it is not profitable and has not been profitable. One thing to remember here is that SoFi originally created itself as a business focused on student loans. And ever since the Biden administration came to office, they put a moratorium on student loan repayments. So, as you can imagine, a company that is focused on student loans does not do so well when the president says student loans do not need to be paid. So that leaves us where we are today with, after several years, SoFi got the bank charter and has steadily increased their revenue over time. And it looks like the company will become profitable in the next quarter or two, despite the lack of revenue from the student loan moratorium. However, as we know, the student loan moratorium has been lifted, and now those who borrowed money to go to school need to begin paying that money back. So not only will SoFi be increasing its revenue as it has been over the last several years, but the delayed revenue, the revenue that it should have been getting and was not from student loans, is going to start coming in. So when we take a look at these financials, they will look miserable, and that is to be expected. But it should be a pretty significant turnaround in the next quarters or perhaps the next year at most. So what we have here is significant short interest at 14.51%. So many people want this company to keep falling in share price. And if it does, and there's a short squeeze, then 14% short interest is enough to possibly cause a short squeeze. But if it does, then that will really drive the share price up. Now, institutional ownership is only 36%. So big institutions are not buying into SoFi. So that will limit the possibility of a short squeeze. So just keep that in mind. Now, the debt to equity ratio just shows it has average debt for a company in this industry, and which I should point out, the industry here is consumer lending, although there is debate as to whether or not you should categorize SoFi as a fintech company or as a bank, because it is both. So you can choose which category you like most and you think is most applicable. Now we look down here. There is no PE ratio because SoFi was not profitable in its latest year, so we don't get a PE. The operating margin is well below average, as you might imagine. Operating margin of negative 19%, almost negative 20%, is in the 36th percentile. And likewise, return on equity, these are negative. Return on assets, there is no return on invested capital because it has not provided any return. The growth rate, although is above average, beating out 63% of others in the industry. And they do not pay a dividend yet, which I think in this case is a good thing because they are not profitable. So they would have to go into further debt to pay a dividend. But if it continues on its upward revenue progression, as we've seen over the past several quarters, it should become profitable, and that would really turn things around. So, especially with the big pullback we had last week, this could be a significant buying opportunity. And I'll also note that the pullback last week was based off of a single report written by someone who apparently does not understand how bonds work. And there have been numerous reports of this throughout the internet. So if you're interested in that whole fiasco, you can go take a look at that elsewhere. But again, just keep in mind the report that precipitated this significant drop is highly suspicious in my mind and in the mind of others who are much smarter than me. But I'll let you make up your own mind about that. But please let me know what you think of the possibility of SoFi, the buy-in at SoFi at these levels in the comments below. And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. And remember, I'm not offering financial advice. I'm not a financial advisor. I make these videos for entertainment and discussion and education. So if you'd like me to analyze a specific company using the metrics you see here, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.